Vice President of Project Development for CMB Regional Centers. But I'm going to take that hat off for a second and put a different hat on. So CMB has a sister company called NHK Capital Partners. And what NHK is a traditional private equity company. So they offer non-EB5, traditional market rate equity investment opportunities in the United States. There we go. Okay. So again, who are we? We're NHK Capital Partners. We were founded back in 2019. And the reason why we started NHK is actually pretty simple. So at CMB, we've been fortunate enough to work with over 6,000 investors from over 100 countries. And those investors have invested in our EB5 projects. They've been very successful. And when we have investors go full circle, and now they're in they've got their green cards, they're in the United States, they've got their money back, they consistently come back to CMB and say, okay, well, you did great for me from the EB5 standpoint. You work with great development partners. Do you have traditional market rate of return investments where I can earn the bulk of the rate of return? Remember, in EB5, it's not about a high rate of return. It's a low risk, risk mitigated investment structure that's focused on getting you your green card above all else, and then return of capital is that 1A. But with any equity investment, you're actually looking for a much higher rate of return. So you saw it back here in my first slide. The project I want to share with you today is called the Edge at Conroe. It is a single-family rental community. The project will consist of 109 individual detached single-family homes, but these homes are not for sale, they're for rent. It's a unique asset class. It's something that we've been taking advantage of at NHK, actually. We've got several ongoing investment opportunities in this asset class, and it's primarily focused on opportunities in Texas. Why Texas? Texas is experiencing unbelievable, unprecedented growth over the last several years, in part because it's a tax-free state. So as states like California continue to increase income tax on its residents, Texas has said, come on over. That, and they also have great tax laws as it relates to business. They're an unbelievable business environment. So you're seeing employers relocate into Texas from, again, states like California, Illinois, New York, really all over the United States. So what that's doing is it's not only matching the demand to be in a state that's growing, it gives you that tax advantage, but the jobs are going there as well. So communities like Dallas, Houston, Austin, and San Antonio have experienced explosive growth. Why would you want detached single-family home rather than a multifamily building? Well, it's really pretty simple. And again, it's going to be kind of like a traditional multifamily project that would be maybe 6, 7, 8, 9, 10 stories tall. It's going to have all those same types of amenities. It's going to have a resort-style pool. It's going to have its fitness center, its clubhouse. It's going to have all of the features that you would look for in a community like that. But it's horizontal. You can do that in Texas because the cost basis of the land is still relatively low. And it gives people a little bit more space. Post-COVID, we saw a lot of people wanting to get out of those multifamily buildings where they were a little bit more tightly packed, a little bit more congested, and they were looking to move out into the edges of the suburbs, into some areas where they have, again, a little bit more space. This gives people just that. So, it's located in Conroe, Texas, just north of Houston, Texas. It's part of the Woodlands submarket. The Woodlands area in Texas, or in Houston, is a more affluent suburban environment. And when you think of Houston, you think of a large market. It's the 7th largest market in the United States. But when you think of kind of where the people are that are raising families, where the people are that are a little bit more affluent, you can buy a little bit bigger house, have a little bit more property. Because remember, everyone wants something big in Texas, right? The Woodlands is one of those regions. Conroe, being part of that market, is a high demand region. As I mentioned, Houston's growing like crazy. It's grown by 1.5 million people since 2010, and they're projecting another you can see it up here, almost 7.9 million people, so another 400,000 people just over the next few years. Again, it's driven by employment growth, it's driven by that tax-free environment and conditions that are changing in some of the other states in the United States that are giving people kind of that push to want to get out of their current living conditions. What's this? Well, the clicker died, but I'll keep going anyway. So with NHK, as I mentioned, we're offering traditional market rate of return investment opportunities. With this particular project, total costs of the project are relatively small, so about 30 million US. We are taking an equity position in the project, so we formed a joint venture with the developer. The developer is a local developer called Excelsior Partners, and they specialize in multifamily developments like this. And they are going to take 15% of that joint venture. Our investors, the NHK investors, will take 85% of the equity in that joint venture. There's only two forms of capital going into the project, about a 50% loan-to-value senior loan, and then about a 50%, or the remaining 50% coming from equity. So a really simple, really straightforward capital structure. Again, sorry, apologies to the lawyers. I'll keep going. Anyway, so the project has already started construction. It started construction at the end of 2023 and is going to be completed by the end of 2025. With NHK, we're looking for relatively short-term investment opportunities. Usually our target is somewhere in the 3 to 5 year mark. We're looking to get in with developers that want to build, want to sell, and then see a substantial equity return upon that exit. So this project is anticipated to reach stabilization and be sold by late 2026. We are currently projecting target return profiles somewhere between 17 and 22.5% IRR, or an equity multiple of about 1.6 to 1.77. All in all, it's a relatively small, relatively manageable project, and relatively predictable. Again, I mentioned the biggest demand drivers for these types of projects. Go. Hey, it's perfect. The biggest demand drivers for these types of projects are the increasing growth of the Texas economy, the job creation growth, but what else? It's also the current interest rate environment in the United States. You have all these people moving into Texas. Texas has a relatively dramatic shortfall in its housing right now, but they're also battling a scenario in which people who do want to buy homes are holding off. They're waiting a little bit longer, looking to see what's going to happen with the interest rates in the United States. Some of you may have seen yesterday the Fed held the rates, which I think a lot of people were hoping they would start pulling those rates down. So I think we're going to be riding this out for a little bit longer. I think the interest rate environment is going to continue to stay high. And so people are going to be looking for rental opportunities for the next year, 2 years, 3 years, probably in high demand to get past this timeline and have interest rates come down, have the housing market catch up in areas like Houston, and then they'd be looking for the opportunity to buy homes. This fits an immediate need in this market. It's a fantastic opportunity. As I mentioned, it's under construction, projected to be sold at the end of 2026. We're taking that 85% of the joint venture, target rates of returns between 17 and 22.5% IRR, equity multiples of 1.6 to 1.77. Going back, it's growth in that market, demand for this type of asset class, and continuing on a track record that NHK has built in these types of assets and have been able to deliver success to our clients is something that's focused us on these types of projects. Thank you for giving me the opportunity to talk to you a little bit about NHK. Apologies for the back and forth and the craziness with the PPT, but hopefully you'll stick around because I'm going to put my CMB hat back on and jump onto this panel here in a second. So thank you.